Namaskar and welcome to the new episode of Text Concepts with Dr. Pushpender Puniha. In today's podcast, we discuss a very specific but a very interesting and a topical development in Section 285B of the Income Tax Act. The Finance Act of 2022 has exponentially expanded the scope of reporting under Section 285B of the Act. As the section existed before this amendment, a person carrying on the production of cinematographic film was supposed to report any payments paid by him or due from him that aggregates more than 50,000 rupees. The reporting obligation was 30 days after the end of the financial year or 30 days after the completion of production of the cinematographic film. With the amendment, the scope has been expanded from cinematography film to include in itself all event managements, documentary productions, productions of program for telecasting on television or the OTT platform or similar platforms, sports events management, and other performing arts or any other activity as the central government may notify in coming days. So the expansion of reporting under 285B is in line with the expansion of digital platforms, in line with the spread of other means than films to entertain the people, to engage the people. So the coverage of reporting, in my opinion, is going to increase many fold under this new amended provisions of Section 285B. Now, where does this amendment fit into the overall picture? And I believe it is in line with the belief of the tax administration that if more and more data about the individuals is told to them before they file their annual tax return, then the voluntary compliance by them will increase. The heroic assumption under the Faceless Tax Assessment Scheme or the other changes which are being brought about in the Income Tax Act, such as the annual information statement which is now given to the taxpayer, is that voluntary compliance is the best method of increasing tax collection, of ensuring more and more compliance with the tax laws. So the amendment of Section 285B, whereby the reporting of all activities relating to digital platforms of production of any documentary film or documentary over the television or over the OTT, is in line with the belief of the tax administration that let's collect the data of financial transactions of more and more persons from third parties, show it to the individual before sits down to file his or her tax returns, and this would lead to a much better compliance with the tax laws of the land. Now let's get clear that who is required to furnish a statement under Section 285B, or if we are to use the phraseology used in the section, who is the covered person. So a covered person, to read what is provided in the Act, is a person carrying on the production of a cinematographic film or a person engaged in any of the following activity. Number 1, event management. Number 2, documentary production. Number 3, production of programs for telecasting on television or over-the-top platform or any other similar platform. Sports management and other performing arts or any other activity as may be specified by the government. Now, the reporting requirement under Section 285B applies to every covered person, and that covered person may be a resident or a non-resident. Say, for instance, a Hollywood movie or any part thereof is shot in India, and the producer of such film, being a non-resident, engages any person in India for production of such film, then the reporting requirement under Section 285B will be attracted in this case also, and that Hollywood producer would be required to send a statement as and when he makes a payment of more than 50,000 rupees. Now, no statement shall be required to be furnished under Section 285B by any of the non-covered persons. Say, for instance, Mr. X, the manufacturing company, gives an event management contract to Mr. A and pays rupees 50 lakhs to Mr. A. Mr. A in turn books a hotel for rupees 10 lakh for a celebrity and pays 25 lakhs more for the performance by the celebrity. In this case, X, being a non-covered person, is not required to furnish the statement. However, Mr. A, who is the event manager, shall file the statement. Or as event management is a specified activity, he shall furnish the details of all the payments made to the hotel and to the celebrity to make that event happen and make that event take place. A covered person is to report every payment made to an entity or an individual who is engaged in the specified activity. The engagement may be partial or it may be small. Reporting shall cover every person handling even a minuscule activity, but that activity has to be essential for the production of the specified activity under Section 285B, such as production of a documentary film or the content creation for an OTT platform. To repeat, there has to be a nexus between the production of the film or the specified activity and the services of the payee. The recipient's nexus with the business of the payer may or may not exist, but his nexus with the film or the content production for the TV or the OTT is essential. A covered person, say for instance, shall not be required to give details of his accountant, receptionist, auditor, etc. in the statement if they are not engaged with the production of the documentary film or the specified activity. An example will clarify this concept. A documentary film producer books the hotel for actors' support staff, and he also books a studio to shoot a scene. The charges paid by him to the hotel need not be reported in the statement, but the sum paid to the studio should be reported as it is directly connected with the production of the documentary film. Now let's examine the phraseology of the terms used in Section 285B to specify the ambit and the coverage of the section. These terms are not defined in the Income Tax Act. For example, what is meant by cinematographic film or a documentary film or an event management? For this, we must rely or travel to the respective legislation or rules prescribed by the regulatory authorities to implement those activities, or what is understood in the common parlance. For instance, the expression cinematographic film is defined in two clauses of the Copyright Act of 1957 as well as the Cinematographic Act of 1952. The definition is also given in the normal dictionaries. A very pertinent point has been made in the case of CIT versus Prasad Film Laboratories Private Limited, 1998, and it is reported at 100 Taxmann, page number 99, where the lordships have combined all the acts which define the cinematographic film as well as the meaning in the common parlance to come to what is the exact meaning of cinematographic film in the Income Tax Act. And if I may read from the judgment, It says a combined reading of Section 2C and Section 2DD of the Cinematographic Act 1952 and Section 2F of the Copyright Act of 1957 and the dictionary meaning indicates that in common parlance and in technical language, the words cinematographic film refers to a film containing picture and sound fit for exhibition and which is generally referred to as a feature film in the field of entertainment. So it is important to remember that the terms which have been used under Section 285B may be understood by referring to the dictionary meaning as well as to the specific acts provided in different statutes or the rules which govern the activity prescribed by the regulatory authorities. Let's go ahead and look at what is the meaning of event management. Like for event management, maybe we can refer to the erstwhile service tax, which defined event management as any service provided in relation to planning, promotion, organization, or presentation of any art, entertainment, business, sports, marriage, or any other events and includes any consultation provided in this regard. Another term which is of great significance is what is meant by the OTT, over the top platforms. The provision of 285B requires reporting by a person engaged in the production of programs for telecasting on television or on OTT platform or any other similar platform. In general, a platform is categorized as an OTT platform if it offers media services directly to viewers via the internet. The definition of OTT is very wide, which would include every platform that delivers any content, application, service over the internet. Reporting under 285B should be limited to production for the OTTs that deliver the program. Say, for instance, Netflix, YouTube, Amazon Prime, Z5 are clear-cut examples of such OTT platform. Now, similarly, if payments made by a YouTuber to a professional photographer, marketing guy, and social manager shall also be covered by the amended provisions of 285B. Now, a question may arise, can Instagram, WhatsApp, TikTok, or Facebook be also included in the OTT? These applications provide a platform for the content creator and influencers to deliver curated content to their followers through the internet. These platforms have all the ingredients of an OTT. So every person creating content for these platforms should be required to furnish the statement under the amended section 285B. A similar logic can be applied to the authors who are delivering audio content through a podcast on Spotify or Amazon Music, or publishers publishing games on the gaming OTTs. How wide the coverage of reporting under the new Section 285B can be gauged by analysis of two more terms used in the section. The first is programming, and the second is the other performing arts. Now, program is defined under Section 2G of the Cable Television Network Regulation Act of 1995. It means any television broadcast and includes exhibition of films, features, dramas, advertisements, and serials. It also includes any audio or visual or audiovisual live performance or presentation. So if we look at the definition of programming, then the reporting requirement under Section 285B shall apply even in case of a person who is engaged in production of promos, in production of advertisement, in production of trailers, whether these are visual or audio or both. Now, let's look at what all will be covered by other performing arts. In the common parlance, the performing arts are music, dance, drama, etc., which are performed for an audience. It is different from visual art, which uses paint, canvas, or various material to create physical or static art object. The performance need not necessarily be a live event, but it can also be for recording of a program. A person engaged in performing arts thus would include, in my understanding, an actor, a stand up comedian, a musician, a magician. These persons now have an onerous responsibility of reporting any payment made by them to an entity or an individual of more than rupees 50,000 that helps in production of their program. For example, an actor on stage or in film is now required to report a payment of more than 50,000 rupees made by her to all technicians, all makeup artists, all stylists, etc., who help her in preparation or in deliverance of her performance. In the last segment of the podcast, let's consider the specific issues of obligation to report in terms of quantum or when to report. Under the amended Section 285B, the threshold limit of rupees 50,000 in the aggregate shall be computed with reference to the financial year in which production or a specified activity like production of a documentary film or creation of content on the OTT platform is carried on. Where the payment does not exceed rupees 50,000 in a financial year, but exceed the threshold limit in reference to the project, the reporting shall not be required. I can clarify this point with an example. Say Mr. X appoints Mr. Y to edit a documentary movie. He pays rupees 35,000 to Mr. Y in March, which is Y's aggregate of the due payment from X till the 31st March of that financial year. Subsequently, the project expands and rupees 25,000 are paid to Y in April of the year. Here the aggregate payment for the project exceeds rupees 50,000, but the aggregate payments made during a financial year in reference to such project does not exceed rupees 50,000. It is 35,000 in one year and 25,000 in another year. Therefore, in these circumstances, Mr. X shall not be required to report the details of the Y in reporting under Section 285B of the Act. To compute the threshold limit of rupees 50,000, all sums paid or due from the covered person shall be included. The method of accounting followed by the covered person is of no relevance. To repeat and to emphasize this point, Section 285B requires reporting of aggregate of payments made as well as payments due. What does payment mean under this section, and what is the significance of the phrase payment due? The term payment is not defined in the Income Tax Act. The second edition of the law lexicon defines the payment in terms of 6 elements, and these are: first, payment is the act of paying or that which is paid. Number 2, it is discharge of a debt, obligation, or a duty. Number 3, it is satisfaction of a claim. Number 4, it is a recompense. Number 5, it is the fulfillment of a performance or a promise under an agreement. Number 6, it is discharge in money of a sum due. On the similar line is the judgment which was reported as far as back in 1977 in the case of CIT versus L. Alagu Sundaram, and it is reported at 109 ITR, page 508. Here, the High Court took reference to the ordinary meaning of the word payment to hold that act of paying money by one person to another shall be construed as a payment. The moot point is, as the payment means and includes discharge of a debt or a sum due, it should include all sums paid by the covered person to discharge the obligation toward the payee. In other words, the threshold limit of rupees 50,000 would be computed on a gross basis, including in it the GST or the reimbursement of expenses or any other allied charges which the payer has paid to the payee. Now, let us examine in a little more detail what is due, what is payment due. Due means an existing obligation or a simple indebtedness without reference to the time of payment, or a debt is certain and fixed though payable in future. A payment becomes due when it is crystallized, that is, an actual quantification is made. In comparison to this, the expression paid is concerned, it means every receipt, whether it is due or not. The moot point here is that as Section 285B requires reporting of payments made or payments due, the reporting shall be required even in case of an advance payment, which means the amount that is paid though it has not fallen due. It is also important to note that the time of accrual in the hands of the payee is not a relevant consideration of the payment made or payment due. One more point which I would like to emphasize is that reporting under Section 285B is very distinct from the requirement of deduction or collection of tax at source. Reporting under this provision shall not absolve the covered person from deduction or collection of tax at source. For example, Mr. A, an event manager, books a hotel to organize a function. He pays rupees 3 lakhs to the hotel. He shall deduct tax under Section 194I and file Form 26Q. He shall also report the transaction in Section 285B statement. Now, what are the consequences of non-reporting? Consequences of failure to furnish the statement is a daily fine. And why should you pay it when you can report the payment which you have made or which are due from you? Thank you for participating in this podcast. I look forward to interacting with you after a fortnight. Have a good day and good time ahead. Jai Hind.